Hi, good morning my dear students. Now moving on to the second question. From the following details, you are required to prepare statement of profit and loss for the year ended 31st March 2018 as per Schedule 3 of the Companies Act 2013. So preparation of the statement of profit and loss is always as per which schedule? Schedule 3 of the Companies Act 2013. So now moving to, I said that in the statement of profit and loss we have two major heads. Which are the heads? It may be, that is, first it is what? Income. The second is expenses. All the incomes, that is sales, that is revenue from operations, is the major income that should be taken under the income. Again, reduce which return? Sales returns. That again we will be getting revenue from operations gross. From that deduct excise duty, will be getting revenue from operations net. Add other incomes, you will be getting total revenue. And the expenses as it is: cost of material consumed, purchase of stock, changes in inventories of the finished goods, opening stock minus closing stock. Again you will be having that work in progress. Again, employee benefit expenses, finance cost, depreciation and amortization expenses, other expenses. So total expenses. A is total revenue, total expenses is B. So what happens? Profit before tax, A minus B, that is total income minus expenses. You will be getting profit before tax less tax expense. Which are the tax expenses? Current tax and deferred tax. You will be getting profit or loss for the year, that is profit means it will become a surplus. Now coming on to this problem, so they are given particulars rupees. Plant and machinery is given 40,000. We anyway not way concerned with this plant and machinery, but depreciation on plant and machinery should be considered. So ignore which point here? Plant and machinery. Furniture, no way concerned with the furniture. Ignore the point called as furniture. Share capital, we were no way concerned with the share capital, so ignore the point called as share capital. Sales, we will be considering what here? Sales. So this sales 3 lakhs is nothing but what? You can take down a pencil and you can mark it. So this 3000 sales will be called as revenue from operations. Again, purchases is there. Purchase is an expense that should be taken down. So purchase is an expense. Trade payables, no way concerned with the trade payables. So depreciation on plant and machinery is there. So depreciation on plant and machinery is an expense that will appear under where? Depreciation and amortization expenses. So for the depreciation on plant and machinery as well as amortization of goodwill, both the points will be coming under one head called as what? Depreciation and amortization expenses. So we need to maintain a note on the depreciation of plant and machinery as well as amortization of goodwill. Interest on debentures 30,000 is there. Interest on borrowings 20,000 is there. Can you notice that interest on debentures and interest on borrowings will be coming under the finance cost? So we need to consider this points, interest on debentures and interest on borrowings under the finance cost. So note number 1, we will be maintaining depreciation on plant and machinery, amortization of goodwill under the note of depreciation and amortization expenses. Again in the second note, finance cost, interest on debentures as well as interest on borrowings will be recording it. Tax is of 30%. Now we can solve this problem, the second problem. See a solution. Statement of profit and loss for the year ended the same 31st of March 2018. Particulars, note number rupees. Income, revenue from operations net, directly we have taken 3 lakhs. Where that 3 lakhs we got? That is sales amount. How much is there? 3 lakhs. That amount we have considered here. So 3 lakhs. Add other incomes. There is any other incomes here? No, it is of nil. Total revenue will becomes how much here? 3 lakhs. Expenses, cost of material consumed. Any cost of material consumed is there? It is of nil. Purchase of stock in trade 1,80,000 is there. We have any purchases? Yes, purchases we have. Here you can see that 1,80,000. This purchases is called as what here? Purchases of stock in trade 1,80,000. Changes in inventories of finished goods. Opening stock minus closing stock. Is there any opening stock as well as closing stock? Nil. Work in progress and stock in trade is also nil. Employee benefit expenses. Is there any employee benefit expenses in this problem? Nil. There is no anything. Finance cost. Note number 1, amount is 50,000. How we got this 50,000 finance cost means you can see here, interest on debentures 30,000 is there, interest on borrowings 20,000, both put together it becomes 50,000. We need to maintain a separate note. I will show the note here. See here, note number 1, finance cost, interest on debentures 30,000, interest on borrowings it is of 20,000, total it becomes how much? 50,000. So finance cost note number 1 it is of 50,000. Depreciation and amortization expenses note number 2 10,000. So depreciation and amortization expenses already I have explained it. Depreciation on plant and machinery how much is there? 4,000. Amortization of goodwill how much is there? 6,000. Both put together it comes under where? Depreciation and amortization expenses. See here note number 2, depreciation and amortization expenses. Depreciation on plant and machinery 4,000, amortization of goodwill 6,000, total it becomes how much? 10,000. So depreciation and amortization expenses it is of 10,000. Other expenses nil. So total expenses how much you will be getting here? 2,40,000 my dear students. So total income is 3 lakhs. 3 lakhs minus 2,40,000. Now you got 2,40,000 means 1,80,000, 50,000, 10,000. 3 lakh minus 2,40,000 you will be getting profit before tax. A minus B. A total revenue 3 lakhs, total expenses B is 2,40,000, A minus B. 3 lakh minus 2,40,000 you will be getting 60,000. So less tax expense. Which are the tax expense? Current tax 60,000. Profit before tax we got how much? 60,000 into 30% you will be getting how much? 18,000. Deferred tax, there is nothing, deferred tax minus. So profit for the year surplus. So 60,000 minus 18,000 you will be getting how much here? 42,000. So this is your solution answer, that is 42,000 you will be getting profit for the year, that is the surplus. So this is the second problem my dear students. Moving on to the third problem. You can notice the third problem. From the following balance, prepare statement of profit and loss for the year ending 31st March 2018 as per Schedule 3 of the Companies Act 2013. Preparation of the statement of profit and loss will take always place as per which thing? This method, this rule is as per the Schedule 3 of the Companies Act 2013. My dear students, here you can see that particulars rupees, cash sales is given 2 lakhs, credit sales is given 3 lakhs. I said sales means here nothing but revenue from operations, but they are given two sales here. Cash is also there, credit is also there. So we need to consider cash sales as well as credit sales. So overall how much it becomes? 5 lakhs. So this 5 lakhs will become as what here? Revenue from operations. Again, less sales returns is also given. We need to deduct this from where? From the income. From the income we used to consider 5 lakhs as revenue from operations, deduct sales returns 20,000. So cost of material consumed 3 lakhs is given, it is an expense, mark it down. Buildings, we were not way concerned with the buildings. Machinery is not way concerned. Bad debt is an expense, that should be shown under other expenses. Tax 30%. After the profit before tax will be shown. Profit before tax will be there, no? After that we need to consider this 30% as the current tax. Note, here important note is given. Depreciation on buildings and machinery at 10% each is given. So we need to find out the depreciation on the buildings as well as machinery at how many percent? 10% each. So can we move for the solution as it is? In the solution, we can see here statement of profit and loss for the year ended 31st March 2018. Particulars, note number rupees. Income, revenue from operations 5 lakh. How we got this revenue from operations 5 lakh months? Cash sales how much is there? 2 lakhs. Credit sales 3 lakhs. You can make pause and you can write this point. See 5 lakhs how we got months. Note here revenue from operations equals to, that is net sales equals to cash sales plus credit sales. Cash sales how much we have? 2 lakhs. Credit sales how much we have? 3 lakhs. Revenue from operations is how much we have? 5 lakhs. Coming to this problem, revenue from operations is 5 lakhs. Less sales returns. In this problem they are given sales returns, so deduct that sales returns 20,000. Revenue from operations net, how much we got here? 4,80,000. Add other income. There is any other income? No. So total revenue equals to how much it becomes? A. Total revenue A equals to 4,80,000 is the total revenue. How we got this 5 lakhs means cash sales plus credit sales minus sales returns. So you will be getting 4,80,000, that is revenue from operations net, add other income, there is no other income, so 4,80,000 will be the total revenue. Expenses, cost of material consumed already is given, cost of material consumed, how much is given here? See in the question, cost of material consumed 3 lakhs is given, as it is we have taken 3 lakhs. Purchase of stock in trade, nothing is there, nil. Changes in inventories of finished goods, opening stock minus closing stock, nil. Work in progress and stock in trade, it is of nil. Employee benefit expenses, there is any employee benefit expenses, nil. Finance cost also nil. Depreciation and amortization expenses, note number 1, 35,000 we have taken, check here. So buildings and machinery value is given, here we doesn't have to consider this buildings and machinery, but somehow they are given depreciation on buildings and machinery at 10%, so we need to consider buildings 2 lakhs into 10%, 20,000, machinery 1,50,000 into 10%, 15,000 you will be getting. So what happens here, you can see the note clearly here, depreciation and amortization expenses, depreciation on buildings 2 lakhs into 10%, 20,000, depreciation on machinery 1,50,000 into 10%, 15,000, total you will be getting how much here, 35,000. So that 35,000 only we are considered here, depreciation and amortization expenses 30,000, note number 1. Note number 2, that is of other expenses, note 2 you have maintained 5,000. What is that 5,000? Don't be confused here, that 5,000 will be treated here as what? Bad debts. Bad debts 5,000 we have. So what we made here, other expenses, note number 2, that is 5,000 is of considered as bad debts. Here you can see that bad debts, note number 2, other expenses, bad debts is how much is there? 5,000. So that 5,000 we have considered here, other expenses rupees 5,000. So overall amount we got here 3,40,000, 4,80,000 minus 3,40,000. We got how much is the remaining, that is profit before tax, we got 1,40,000. How we got 1,40,000 means 4,80,000 minus 3,40,000, you got 1,40,000. Less tax expense, current tax 1,40,000 into 30%, you will be getting how much here? 42,000. Less again deferred tax, minus it off, there is no any deferred tax, so nil. Profit for the year, surplus, how much is the surplus you will be getting here? 98,000, my dear students. So we can move on to the next problem, my dear students, that is problem number 4. From the following balance, prepare statement of profit and loss for the year ending 31st March 2018 as per Schedule 3 of the Companies Act 2013. We know that always we will be preparing under the Schedule 3 of the Companies Act 2013. Sales 10 lakhs is given. What is the sales? Sales is nothing but revenue from operations. Cash purchase is given, credit purchase is given. Can you remember that in the last problem they are given sales, cash sales and credit sales, but now they are given cash purchase and credit purchase. So both together only we need to take it as purchases. 2 lakhs plus 4 lakhs, it becomes 6 lakhs. That should be made in where? And again they are given purchase returns also. So net purchases it will be 6 lakhs here, purchases, cash and credit purchase 6 lakhs minus 20,000, 5,80,000 will be the net purchase, that is an expense. Power and fuel should be shown under where? Under the head of other expenses. Consumption of stores should be shown under the expense. Interest on bank loan is 30,000 is considered what expense here? It is of finance cost. Tax 30% should be shown profit before tax. After that you will be showing the tax 30%. Current tax will be reducing it. Solution, statement of profit and loss for the year ended 31st of March 2018. Can you go for this problem? Check it here. Listen here carefully. Particulars, note number, rupees is given. Income, revenue from operations net. We know that 10 lakhs as it is we have taken, that is sales. Other income is nil. So total revenue, A, how much you got here? 10 lakhs. Now expenses, cost of material consumed. See my dear students, in the last I discussed in the question, cost, consumption of stores 50,000 is there, no? That consumption of stores is nothing but here what? Cost of material consumed, it is of 50,000. Purchase of stock in trade, 5,80,000 I have considered. How I have considered means, listen here once again in the question, cash purchases 2 lakhs, credit purchases 4 lakhs, it becomes 6 lakhs minus 20,000 purchase returns. Net purchases it becomes how much? 5,80,000. I have maintained a separate working note for that. You can notice here, note net purchases equals to cash purchase plus credit purchase minus purchase returns. Cash purchase 2 lakhs, credit purchase 4 lakhs minus 20,000. So this is not revenue from operations, my dear students, it is of purchases. So net purchases, it becomes as how much here? 5,80,000. So net purchases will be 5,80,000. So we have considered purchase of stock in trade, it has 5,80,000. Changes in inventories of the finished goods, opening stock minus closing stock, it is of nil. Work in progress on stock in trade is nil. Employee benefit expenses, is there any employee benefit expenses? It is nil. Finance cost 1, we have maintained note number 1, it is of 30,000. How we got finance cost 30,000 means you can clearly see here interest on bank loan, how much is there? 30,000. This interest on bank loans appears under where? Under the head called as the finance cost. Here we have maintained the notes here. Note number 1, finance cost, interest on bank loan, it is of 30,000. So we have taken that 30,000 interest finance cost, note number 1, 30,000. Other expenses, note number 2, we have maintained how much is there? 30,000. Again we can see the question here, that is power and fuel, how much is given? 30,000. This 30,000 will be treated as what here? Other expenses. I have maintained a separate note here. You also need to maintain the notes. Note number 2, other expenses, particulars rupees, power and fuel, it is of 30,000. Now coming here students, so 10 lakhs is the overall total revenue. 10 lakhs minus 6,90,000, that is total expenses. You will be getting profit before tax. A minus B is 3,10,000 less tax expense. Which are the tax expense here? Current tax. On 3,10,000 into 30%, you will be getting how much here? 93,000. Deferred tax is nil. So profit for the year surplus. How much is the profit for the year surplus? You will be getting 2,17,000 is the surplus for this problem, my dear students. Coming on to the next problem, that is the 5th problem, my dear students. Very important problem also. All the problems are important. We can't ignore any problem in this situation because the chapters are only less, that is 7 chapters are there. So they can give in any corner, in any chapters they can ask the questions, my dear students. So chapter, that is question number 5. From the following trial balance, prepare statement of profit and loss for the year ending 31st March 2018 as per schedule 3 of Companies Act 2013. Here just a difference, trial balance is given. Based upon this trial balance we need to do the problem, which is that method, that is which are the thing we need to do here? Statement of profit and loss. So sales is given 10 lakhs. So this sales is nothing but what here? Revenue from operations. Salaries 90,000 is given. Wages 1,10,000 is given. This salaries and wages will be considered as what? So this salaries and wages are considered as employee benefit expenses, should be maintained in a separate note, employee benefit expenses. Stock is given 1,50,000 stock is given. My dear students, in the book the sir has been maintained that stock should be ignored. So make a small correction here relating to the stock here. In the stock 1,50,000 we should consider as an opening stock, it is not a closing stock. Again closing stock is nil here. So 1,50,000 should be taken as an opening stock here, my dear students. Purchases 4 lakhs is there. This we used to consider under where? Under the purchases, that is under the expenses. Bank overdraft, no way concerned with the bank overdraft. 12% debentures issued on 1/4/2017 is there. 12% debentures, my dear students. Remember here, whenever they are given the 12% debentures, we need to remember one thing. In the finance cost can be considered for the point called as what? Finance cost. So interest on the debentures, because they are given the date also 1/4/2017. So 1 lakh into 12%. So we'll be getting 12,000. That 12,000 should be considered under where? Under the finance cost. Plant and machinery 1,60,000, no way concerned. Depreciation on plant and machinery. Plant and machinery doesn't require the information for the preparation of statement of profit and loss. But depreciation on plant and machinery, we require the 16,000 for the showing of what? For the depreciation and amortization expenses. So it should be maintained under the separate note. Equity share capital 2 lakhs, no way concerned here. 7% preference share capital also, no way concerned on this capitals, because it will be taken under the balance sheet. Land 6,74,000 is there. For this also it is no way concerned. So tax rate, note, important note is given there. Tax rate how much is given? 30% is given. So it is treated as a current tax. Now coming to the solution, my dear students. Statement of profit and loss for the year ended 31st of March 2018. So you can see here, income, revenue from operations net, how much we got? 10 lakhs, that is the sales 10 lakhs is given. Other income is nil. Total revenue, how much you will be getting? 10 lakhs. Expenses, cost of material consumed, 4 lakhs is there. Where we used to get that 4 lakhs cost of material consumed? So see here, 4 lakhs cost of material consumed is how much is there? 4 lakhs. See here, purchases 4 lakhs, that is cost of material consumed is nil, I think. Yes, cost of material consumed is nil. Purchase of stock in trade is 4 lakhs. Where do you get the purchases of stock in trade? That is purchases 4 lakhs is given. So we need to consider that purchases of rupees amount of 4 lakhs. Changes in inventories of finished goods. Opening stock, how much is given? 1,50,000. There is no closing stock, nil. So listen here, this stock whatever is there, no stock in the question, 1,50,000, considered as an opening stock. In the book some printing error has been happened, it has been given closing stock. So consider this as an opening stock, 1,50,000. So on that 1,50,000, see here, 1,50,000 minus nil, closing stock is nil, that is 0. You will be getting how much here? 1,50,000. Work in progress and stock in trade is nil here. So employee benefit expenses, note number 1 is 2 lakhs is given. Employee benefit expenses, which are the point I have said already. Employee benefit expenses, salaries and wages, 90,000 plus 1,10,000, you will be getting how much here? 2 lakhs. We can note down here. So see here, I have note number 1, employee benefit expenses, salaries and wages, 90,000 plus 1,10,000, you will be getting 2 lakhs. Employee benefit expenses. Employee benefit expenses, note number 1, it is of 2 lakhs. Finance cost 12,000. How we got this finance cost, my dear students? Here hidden information is given. Hidden information, where it is given means, listen here, 12% debentures on date is also given. So 12% debentures on which date they are given? 1/4/2017. We are preparing on 31st March 2018. So 1 lakh into 12% into 12%, if you make for 1 year means it will be become as how much? 12,000. That I have shown in the separate note. Note number 2, finance cost, interest on debentures, 1 lakh into 12%, you will be getting 12,000. Total it becomes how much here? 12,000. So finance cost, you can understand that finance cost, note number 2, it is of 12,000. That is 1 lakh into 12% on the interest on debentures, you will be getting 12,000. Depreciation and amortization expenses, note number 3, it is of 16,000. Depreciation and amortization expenses, which are the depreciation and amortization expenses? See here, depreciation and plant and machinery, 16,000 is there, that we have maintained in the separate note. Can you see the note here? Note number 3, depreciation and amortization expenses. Depreciation on plant and machinery, how much is there? 16,000. That 16,000 we have considered here. So that 16,000 we have considered under the depreciation and amortization expenses. So other expenses is nil. So total expenses, so how we used to get total expenses? So 4 lakhs plus 1,50,000 plus 2 lakhs plus 12,000 plus 16,000, you got 7,78,000. 10 lakhs minus 7,78,000, you got profit before tax, A minus B, 2,22,000. 10 lakhs minus 7,78,000, you got how much answer here? 2,22,000 as the profit before tax. Less tax expense, current tax, 2,22,000 into 30%, how much you will be getting here? 66,600. Deferred tax, any deferred tax is there? Here it is of nil. Profit for the year, that is surplus, how much you will be getting? Exactly 1,55,400. Don't be confused with the note related with which thing I said, related with the point called as which thing? The changes in inventories of the finished goods. You can make a note now. You can scratch it in the book as it is, you can take it here itself. Note, no information is given about closing stock on 31st of March 2018. On 31st of March 2018, which information is given, which information is not given? Closing stock information is not given. Assume that there is nil closing stock. Closing stock is nil means that stock whatever we have, that is treated as opening stock. Opening stock minus closing stock, you will be getting which point here? Changes in inventories of the finished goods, that is 1,50,000. So your answer will be exactly 1,55,400, my dear students. Now moving on to the next last problem here, the same problem I think here, some changes. 6. From the following trial balance and other information, prepare statement of profit and loss for the year ending 31st March 2018 as per Schedule 3 of Companies Act 2013. Debit, that is particulars, debit and credit. Land and buildings. We were nowhere concerned with the land and buildings. So here we are preparing only the statement of profit and loss. So we can ignore which point? Land and buildings. Trade receivables. Even this trade receivables is an asset. We should not consider here the trade receivable. Trade payables also is not necessary. See again here 10% debentures are given on which date? 1/4/2017. So this 10% debentures on 1/4/2017 should be considered to calculate which hidden information. 3 lakhs is given. This hidden information is to calculate which thing? Interest on debentures at 10%. So 3 lakhs into 10%, it becomes how much? 30,000. So that will be coming under the finance cost. It is an expense. Sales 15 lakhs is given. This is an income, revenue from operations. Net purchases is given 10 lakhs. It is an expense. Wages and salaries, employee benefit expenses 50,000. Contribution to provident fund 10,000. This is also an employee benefit expenses. So wages and salary, contribution to provident fund should be maintained in a note. 50,000 plus 10,000, it becomes 60,000. Plant and machinery, no way concerned with the plant and machinery. Goodwill 2,40,000. Adjustments they are given. Tax rate 30%, that is of current tax. Depreciation on plant and machinery at 10%. And amortization of goodwill 24,000 is there. So depreciation on plant and machinery 10%. Here information is given. Plant and machinery how much is given? 2 lakhs. 2 lakhs into 10% how much it becomes? 20,000. And amortization expenses of goodwill is how much? 24,000. So depreciation of plant and machinery and amortization of goodwill should be taken under an point note called as which thing? Depreciation and amortization expenses. Coming to the solution now, statement of profit and loss for the year ended 31st of March 2018. So in the income, particulars, note number rupees. Income we are considering revenue from operations net. How much we got revenue from operations? Here 15 lakhs. Other income is nil. So total revenue, here how much will be getting? 15 lakhs. Expenses, cost of material consumed nil. So purchase of stock in trade 10 lakhs. Here they are given the information directly. How much is given? Net purchases 10 lakh. 10 lakh is given net purchases as it is, we are taking it. Purchases of stock in trade, how much it is there? 10 lakhs. Changes in inventories of finished goods. Opening stock minus closing stock. Any opening stock as well as closing stock? Nil. Work in progress and stock in trade. Nothing is given. Employee benefit expenses 1. Note number 1, it is of 60,000. Can you see? Already I have said that wages and salaries how much is there? 50,000. Contribution to provident fund 10,000. Overall it becomes how much? 60,000. My dear students, here we have taken employee benefit expenses. Note number 1, 60,000. How we got that 60,000 means here you can clearly see here. Note number 1, employee benefit expenses, wages and salaries 50,000. Contribution to provident fund 10,000. Total it becomes how much? 60,000, my dear students. Next, again they are given finance cost. Note number 2, it is of 30,000. So where do we get that 30,000 means? I said that hidden information. Where we get that hidden information? 10% debentures on which date they are given? 1/4/2017 is given. So what we are making here? So on amount of 3 lakhs, 3 lakhs into 10%, how much we got? 30,000. That 30,000 should be considered under where? Under the 10% debentures, under the finance cost. Here you can clearly see the note also here. Note number 2, finance cost. Interest on debentures 3 lakhs into 10% will be getting how much? 30,000. Now my dear students, coming on to the next thing here. So depreciation and amortization expenses, note number 3, it is of 44,000. How we got that 44,000? I have clearly explained here. Plant and machinery 2 lakhs is given. Depreciation on plant and machinery how much is given? 10%. 2 lakh into 10% you will be getting 20,000, and amortization of goodwill by rupees 24,000. So 20,000 plus 24,000 you will be getting how much here? 44,000. You can see the note here. Note number 3, depreciation and amortization expenses. Depreciation on plant and machinery 2 lakh into 10% 20,000. Amortization of goodwill 24,000 directly is given. Total it becomes how much? 44,000, my dear students. So again So we got the other expenses is nil. Total expenses we got 11,34,000, my dear students. So total revenue A is how much here? 15 lakhs. Total expenses B is how much is there? 11,34,000. Profit before tax A minus B. How much is A here? 15 lakhs minus this B, 11,34,000. You will be getting how much here? 3,66,000. So this 3,66,000 will be profit before tax A minus B. Less tax expense, current tax 3,66,000 into 30%. How much you will be getting? 1,09,800. Again deduct deferred tax. There is any deferred tax? Nil. So profit for the year surplus 2,56,200. How we got 2,56,200 means 3,66,000. So in that current tax 3,66,000 into 30% will be getting 1,09,800. So profit for the year, that is of surplus, will be getting 2,56,200. My dear students, these problems are very much important for the 6 marks sections. So in the next class we have 2 steps. In the first step we have completed, that is statement of profit and loss. In the next class, in the next section, we can move for the next concept called as which thing? Balance sheet problems, my dear students. So until it is bye from Kulandiraj, accountancy lecturer, SDC College. Thank you, my dear students.